Hello, traders and investors. So we're going to call this one wrapping up the Buttercup, okay? And it did end at a loss. However, I can't. Unfortunately, I found out that there are some limits here to the number of adjustments that can be applied to a trade. My losses were not anywhere near this amount. I'll show you where I did end up loss-wise shortly. But although it's a high limit and under normal circumstances, I would never adjust anything this many times. I adjusted this trade 24 times. And each one of those had multiple legs with it. So anyhow, sheer craziness. This was just kind of an exercise to help show students what can be done, and I will show you how I kind of got to completion on this, but at the end of the day I can't demonstrate it all in here just because of a very high limit, but it still is a limit. I don't know if anybody's ever hit it before, but anyhow, had I stayed in my initial position and never adjusted anything, let's see, I can't even hardly range out that much, but it would have lost $23,000. Of course, along the way, I did different things to adjust this we were down less, we were actually up at certain points, and then I ended up actually closing this trade down $5,900 after all commissions were taken into account. And again, unfortunately, I just simply can't go out that many iterations here. But let me pull down, well, first of all, let me take a look at our market just so people understand what this trade went through. So this trade was opened here on the 13th. So it opened here. And then the very next day, I actually thinned it a little bit with a little bit of profit. And then we had this massive sell-off. When we broke down in here, I adjusted this thing. Actually, I think it was this day. I adjusted it, giving it more downside room. And then as the market broke below this, I opened up the downside even further. And then down here, when we broke to new lows, I opened the downside even further. And then, of course, we get the rip back rally. So in that rip back rally, now I'm kind of adjusting the opposite direction a little bit, and things were stabilizing, looking fairly good. And at one point, I was down to where this trade was only down about $3,500. That was here on the day that I closed it. Mid-morning, when we had a little bit of a rally this morning, the trade was only down about $3,500 in total. I had another commitment I had to go to, and I put an order out there, hoping that it would continue to decay in that general range and take me out at about $3,500, $2,500, somewhere in that range in loss. But then we can see here on our futures chart that after that little mid-morning rally, while I was out, of course, the market just plummeted. So by the time I came back, this trade was down quite a bit more. The loss had almost doubled in it from where it was when I left. And this is one of the reasons, by the way, that I personally don't like carrying something into expiration. The day of expiration, which is essentially what this one is because it's an AM expiration, meaning that it settles at the open tomorrow morning, but I can't trade it tomorrow morning. It's whatever number it opens at tomorrow morning. It's like, bing, that's where this thing gets pinned. So anyhow, as a result of that, I did want to get out of it, but it requires literally sitting there at your computer and looking at 5 or 15 minute charts, and that's just not me. That's just anymore. I mean, that was at one point, but I had other commitments this morning, so I went and did my other commitments. Anyhow, let me show you here. I'll drag down just so people can kind of see. This is a way that I sometimes will track all of these things. This is something that connects directly into my broker, and so it actually logs every single trade, every single adjustment as it's made. So we can see the amount of craziness that this thing went through. Here's the dates here, and then all the way down through when that trade was closed today. And again, at one point, this trade had gotten down about $18,000. So the fact that I was able to wrestle it back to about a $6,000 loss, it's good. This is my largest loss that I've had in a while. I have a lot of other trades on. Virtually any other trade I would have shared here are all up at this point. This is the only one that is not, but you know, it's down a decent amount. In the overall scope of things and my trading, yeah, I don't like this, but it's not... it's all relative, I guess, is the point to make. I mean, if I were trading a $10,000 account, this would, of course, be devastating. And I never would have been in this size anyway. But that's not my situation. And so, you know, this is an acceptable loss to me. It's part of the game. This is a 30% loss. Now, most of my winners will be in the 10 to 50% range. And I will have, generally speaking, far greater number of winners than I do losers. So overall, it's a math game, and you know, losses happen. And again, when you take a trade like this and you run it through a cycle of, let's see, 4,500 points, you know, 300 S&P points, you know, drop down and then rally up 150 S&P points, drop back down 100 S&P points. While butterflies are pretty darn forgiving, they don't normally cycle through that many up and down cycles very well. That's what we call whipsawing. So this is the conclusion of the Buttercup trade. May it rest in peace. Take care, everybody.